This is the volume profile, one of the most underrated tools in trading. It gives you sniper-level precision on your entries. Most traders completely overlook it, but after this video, you're going to use it and you're going to love it. Let's start with the volume profile basics. The volume profile shows exactly how much volume was traded at each specific price level. Most traders only look at the volume bars at the bottom of the chart. That's volume over time. But the volume profile flips the script. It displays volume vertically, right on the price axis. So instead of asking when was volume high, you start asking at what price was volume concentrated. That's a massive difference, because what it really reveals is this: where buyers and sellers were the most active, where big positions were built, where the market actually agreed on price. In the simplest of terms, it tells you where the market cared the most. Why does that matter? Because markets have memory. When price returns to a level where heavy trading has already happened, the same players, or new ones reacting to that level, often step back in. That creates some of the strongest reactions and gives you high probability entries and exits. No more blind trading. You're now trading around proven areas of interest. Now let's break down the 3 levels that you'll actually use every single day. Value area high. This is the upper boundary of the value area, where most of the trading activity happens. The value area low, the lower boundary of that same high activity zone. Point of control. This is the single most important level. It's the exact price where the highest volume was traded. Think of it as the market's fair price for that period. Together, the value area high and low contain roughly 70% of all the volume traded in that profile. Let's take a look at the different types, starting with the anchored volume profile. On TradingView, you'll find it in the left toolbar. Simply click the start of any range you want to study, and it plots out the volume from that exact point forward to current price. The thick, long bars are high volume nodes, or HVN. Think of these as the battle zones. Price tends to react or reverse here. The thin, short bars are low volume nodes. Price usually rockets straight through these areas. The red line is your point of control, or POC, and it acts like a magnet. Price loves to revisit it before its next big move. Pro tip: by default, the value area high and low are turned off. Go into the chart settings and turn them on. You'll instantly get 2 extra high probability levels on your chart. Combine these with Fibonacci, horizontal support and resistance, or any of your other tools, and you'll be building real confluence. Next up is the fixed range volume profile. Unlike the anchored version, this one lets you select any specific past range without dragging in current price action. It's perfect for marking previous points of control that often become strong support or resistance once price returns to them. For day traders, the session volume profile is pure gold. On TradingView, it automatically creates a fresh volume profile for every new trading session. You can get a clean daily breakdown of where volume was concentrated. But quick rule: never trade the current session's profile while the day is still moving. The levels continue to shift and can give you false signals. Instead, focus on completed sessions. The data is fixed, and the previous day's point of control often acts as support or resistance the next day. Don't have the session tool? No problem. Just use the fixed range tool on each completed session manually. You'll get almost identical results. Let's walk through a real setup using the fixed range tool. We're in a clear downtrend. Price starts consolidating sideways, then breaks lower. I drag the fixed range from the start of the consolidation right up to the breakout candle. Then I'll add a Fibonacci retracement from the swing high to the swing low. And look at that. The 618 fib lines up exactly with the point of control. Later, price retraces, taps the point of control, gets rejected hard, breaks the recent low, and leaves a clean bearish fair value gap. That's our short entry. Stop loss set above the recent high. Target the next major support or low volume node below. Remember, this is for educational purposes only. Always use proper risk management. Now let's look at the session volume profile in action. New session opens. Price breaks above yesterday's point of control and makes a higher high. Clear bullish structure. Later, price pulls back and retests that same point of control. Then we get a market structure shift, a strong break, and close above the most recent swing high. We can set a long entry on the retest of that swing high. Stops set below the recent low, and targets at the next resistance or high volume node above. The volume profile might look complex at first, but with a little practice, it becomes one of the highest probability edges that you can add to your trading. If this video helped you understand volume profile, drop a like, share it with another trader, and subscribe for more free content like this. Let me know in the comments, what's your favorite volume profile setup, or what you want to see covered next?